Good evening, everyone. Time for another silver update. This is the 2-hour gold silver cross provided by netdania.com. You can click on the link below. Now, I've drawn a couple of trend lines in here. You can see that gold came off of the smackdown with this rising trend line, whereas silver actually had a decreasing trend line until we got this breakout when gold rallied and then silver started to catch up. Now, when we had this sell-off here, they both came down equally, but we can see that gold is ahead again, and silver is not quite halfway back. So we expect to see if this rally is real and we get retracement back to these prices. Silver's probably going to catch up. That's what it's always done. It's called the devil's metal, and that's because of the volatility in silver. Now, I've said many times, I personally don't believe that the volatility in silver has anything to do with the fundamentals of silver as an industrial metal or as an investment metal, but it has to do with the manipulation of the central bankers who are actively suppressing the price by using the banks, the bullion banks, to sell paper contracts to suppress the price. And I believe that silver is a much more feared commodity than gold, although neither one is a commodity. They would like you to believe they're a commodity, but they're actually money. But I wanted to read you a quote from Alan Greenspan to just remind you of what we're talking about here. But before that, I want to mention, I'm not going to go to the article, but there is a Zero Hedge article about how 99.3% of the gold shorts are JP Morgan's, and there's another important article on TF Metals. You go to Turd Ferguson's blog talking about how the commercials in silver have actually held their long positions, and now we have about 82,000 contracts long. So it does appear that some are going to try to make a stand, but then again, making a stand against the central banks is a very dangerous proposition unless you're just buying physical and stacking. But let's go to this quote here. This is from New American, and you can find this quote anywhere. I just chose this article because it was in a Google search. But citing a wide array of experts, the New American magazine explained in detail how the Fed was manipulating markets, including gold and silver prices, in a 2010 report about how monetary authorities have essentially rigged markets in everything from stocks and bonds to bullion. Quote, central banks stand ready to lease gold in increasing quantities should the price of gold rise. Then Fed boss Alan Greenspan told the House Banking Committee in 1998, in other words, if gold prices go up, the central bank will make sure they come back down. The Fed has publicly admitted as much. So I don't think it's a real mystery as to who is behind the rigging of the gold and silver prices. Now, of course, we know that the Fed is behind the rigging of bond prices. That's what quantitative easing is. And most of us suspect that the Fed is behind the rigging of stock prices as well. So we're now looking at a planned economy, a centrally planned economy. And of course, we know how those things turn out. They turn out in absolute disaster. So let's look at an article from Zero Hedge. I want to talk a little bit about the austerity debate. We have a lot of debate about austerity, austerity that is always talked about but never seems to come. And this is Zero Hedge, Austerity in 3 simple charts. Now that the absolutely irrelevant debate over the applicability of the 90% debt to GDP Reinhardt and Rogoff hard cutoff for sovereign growth is supposedly over due to an Excel mistake, of the type that JP Morgan did at least once to misrepresent its VAR both internally and to public shareholders, which to a large group of supposedly people is equivalent to supporting the notion that a record debt global conflagration can only be resolved with even more debt, perhaps the debate can shift to another question. Why, despite all the bickering and complaints, Europe has never actually engaged in austerity, in spending or debt cuts, and that the primary reason people's plight in the periphery worsened in the past 3 years is nothing more or less than gross political and governing incompetence. So we have an exhibit here. The only 2 countries in Europe that have actually reduced government spending are Iceland and Hungary. And Ireland has done a good job of keeping spending flat. To everyone else, please complain about austerity louder. Maybe it can mask the fact that you never actually implemented any in the first place. Now think about that, people. We've had these debates in the U.S. We had the fiscal cliff. We had the sequester. We had these huge debates. We have news stories from the faux press, the fake media. These are government mouthpieces. This media is owned by the government, and they're telling you that we're going to have to lay off air traffic controllers, flights are going to be delayed, and all this stuff. And the fact of the matter is, they've never cut anything, and they have no intention of cutting anything. It's all a gigantic charade. Now let me prove that to you. This is a chart from ZeroHedge.com, and this is the total U.S. public debt to GDP. And you can see on this chart that ever since January of 2009, when the ratio of total debt to GDP was around 77%, we've now risen to 105%. So that is a phenomenal rise during the Obama administration. The Obama administration has been about one thing, and that is tax and spend. That's what Democrats are about. Democrats are interested in spending other people's money, and it's very clear here that's what they've done. Now, but you can see that we have not had any austerity in the United States either. You can look at the deficit, which continually goes up, government spending, which continually goes up, government workers' salaries and pensions, which continually goes up. So the question I would ask is, if it were the case that we could stimulate the economy with government spending, then wouldn't you expect this chart at some point to reverse itself? You can see a minor reverse here. It looks like fake numbers, but pretty much the trend on this chart is straight up. The percentage of debt to GDP is continually rising, and what that means is that our GDP is shrinking and our debt is growing. Now, if what they're telling us is correct, that we can tax people or we can borrow money and we can stimulate growth, we can cause the economy to grow, which will cause tax revenues to rise, which will ultimately cause a recovery, and then we can grow our way out of this thing. If that were true, would this line be constantly going up? Well, of course not. So obviously it's complete lies. There is no austerity. There never has been any austerity. There will not be any austerity. They have no intent in the European socialist / communist nations, Britain, socialist / communist America, socialist / communist in Japan, socialist / communist Western nations. There is no intent to reduce the size of government. They have one goal, and that is to grow the size of government until they completely collapse all of these economies and their currencies. That's what's going to happen. They've made it very clear, and they haven't changed course. So let's get back over to silver. I want to take you over to APMEX. Now, this is the 90% silver bags. You can see they've gotten bags back in. There's 10 on the 1,000 face, and there's a few more on some of these others. But you can see the price here is 21,271. You divide that by 715. It comes out to about 29.50 an ounce. So based on the price of silver, we're still talking about more than $5 an ounce above spot for junk. As I pointed out before, that is an unprecedented premium for junk silver above spot. So I wanted to look at the coins that I follow frequently, and that's my favorite coins are the Perth Mint. I'm not going to go through all of them. I can tell you this, that if you go to the koalas, they're pretty much all gone, including the half-ounce favorites of mine. The Lunar Series, the Dragon half-ounce, they had a lot of those in. They got about 3,000 more in. You could have got those for 15 something. I think those were an incredible deal. I picked up quite a few of those. Those are now gone, and pretty much all the Perth product is gone. But I wanted to show you one coin here that when we think about the price of junk silver over spot, I think you're going to agree that this is probably a really good deal. Now, if you go through these, you're going to see sold out, sold out, sold out. It's crazy, and that's a whole nother story. We know why that is, because no one's going to sell silver at a loss. But sometimes you find a bargain, and this is the one I found. There are still 3,668 of these Australian Kookaburra snake privy coins. Now at 30.26, you're talking about only about 70 cents an ounce above what people are paying for junk silver. Now there may be some dealers that are giving better deals than that, but I can't find them. So this is the deal of the night for me. This is a great deal at $30. I fully expect the price of silver to bounce back up to $30 in the paper market. In my mind, it never really has gone below that, just because if you watch eBay and the premiums, this is what we saw in 2008. When you get a fake smackdown, eventually it comes back and then premiums adjust. So it's pretty much like the price never dropped. So I wanted to answer a few questions real quick, and then we'll wrap it up here. This is from Timmons 4, Market for Physical Metals Only. Brother John F., why hasn't a physical metals market only been created as of yet? Everyone is aware that market manipulation exists in the precious metals arena. Why hasn't someone with a lot of resources and clout, such as Eric Sprott, with the backing of GATA, Jim Sinclair, Mike Maloney et al., spearheaded the formation of a separate market for precious metals only? Well, I assume what you're saying is physical metals only, and we have those. We have, all the bullion dealers, but I guess what he's asking is, why don't we have a price set by the physical rather than the paper? Well, of course, that's because the markets are captured. They're captured by the COMEX and the LBMA, which behind them are the Federal Reserve and the Bank of England. I don't think that's going to change until the whole system collapses, and then you're probably going to see that type of thing happening in China. And this is from CC Nutritionist. If JP Morgan accounts for 99.3% of COMEX sales recently, as I just read in Zero Hedge, then my question is, how and when did JP Morgan buy in their enormous position? Did they do it over time so it didn't push the price up, or did this perhaps cause part of the big run-up a couple of years ago? Was this part of their shorting plan, perhaps going long as they bought in? If so, I'm thinking I'm finally getting it. Much obliged. Well, the big false assumption you're making here is that if JP Morgan accounts for 99.3% of the sales on the COMEX, that at some point before that they would have had to buy. Now that's something that you would have in the stock market. So if you're talking about someone who's selling a tremendous amount of stock, like 99.3% of the sales of a particular stock, let's say Apple stock, and they smash the price based on all of those sales that they do. Well, if they had that stock in the first place, then they could do that, but they could also short the stock, which means that they borrow the stock from people who own the stock, and then they sell it. Now, in the stock market, we have what are called naked shorts and these fake short sales. Traditionally, in the stock market, if you sell stock short, your broker actually has to source it in street name, which means that someone else has to actually own that stock for you to sell it. Now, when we're talking about paper COMEX sales, they don't have to put up any silver. They don't have to prove they have any silver. They don't have to prove that they're a miner. They don't have to prove that they're a hedger. The only thing they have to do is put up the dollars. And as we know, as I pointed out, JP Morgan is essentially a proxy for the Federal Reserve, and the Federal Reserve has an infinite amount of dollars. So if the only requirement to sell silver is to put up the dollars to sell it, then obviously JP Morgan and the Federal Reserve can short an infinite amount of silver. That is, until we get a physical disconnect where the price of that fake silver, which doesn't really exist, disconnects from the price of real silver. When we see that, we will see this COMEX price for silver disconnect from the real price of physical silver. And at this point, when we are speaking, the real price for physical silver is somewhere up here. So it's my opinion that we're actually seeing that disconnect occur at this time. And once that is fully resolved, then obviously we're going to see the fully discredited COMEX and LBMA and JP Morgan and the Federal Reserve. And obviously that's the reason why they're fighting this so hard. And we'll talk to you next time.